Let's get you all the business news now. And after starting the week on a strong footing, markets gave up gains to end in red after a volatile trading session. Private banking and realty sectors declined in trade. Sensex was down by 216 points, while Nifty ended at 18,755. Hiral Dadia with the wrap of all the market action.
Selling at higher levels is what we're witnessing in terms of where markets go. Clearly, we did regain those 18,800 levels, but markets have not been able to maintain that momentum. And the selling pressure actually took us back below the 18,750 mark on Nifty 50 on closing basis. In fact, Sensex fell over 200 points and it was a volatile day of trade. Clearly, the PSU banks did see a good rally in today's session, whereas the real estate counters were a drag. A pretty mixed move in terms of where sectoral performance goes. Bank Nifty underperformed the benchmark indices in trade today, where we saw cuts of over 300 points coming in there. And if you see in terms of broader markets, you had the mid-cap as well as the small-cap index, which ended pretty much flat. The breadth was pretty much in favor of the bears in today's session. So clearly, if you go to see Nifty's journey in terms of to get to all-time high levels is something which is facing absolute resistance, and the participation with regards to Bank Nifty also becomes absolutely crucial. Let's quickly look at what's happening with stock-specific action. You have the likes of the HDFC Life, Bajaj Twins, Tech Mahindra as well as TCS, which were the top gainers on Nifty 50, whereas on the losing end, you had Adani Enterprises, Kotak Mahindra Bank, Hero Moto, Adani Ports as well as a Power Grid. Talking about newsmakers, from the PSU index, you had Bank of Baroda, which actually crossed the 1 lakh crore mark in terms of market capitalization. And this is the second PSU bank after SBI to do so. Britannia hit a new lifetime high as well. In fact, good positivity with brokerages. Inox Wind Wind Energy also hit record high levels in today's session. Jindal Steel, on the back of a Kotak upgrade was in focus. Shriram Finance jumped over 7% on the back of a block deal. Axis Care Technologies on the back of a new acquisition was up in trade. Nika on the back of positive commentary from the analyst meet saw some good moves. And you had a KC International which was up in trade on the back of accumulative rating by Nirmal Bang. So clearly a lot of newsmakers in trade today and stock specific action. But yes, there is strong resistance for the markets to inch towards life high levels. Back to you.
With the government's boost for capex plans, JM Financial Services Vinay Jai Singh thinks that defence will emerge as a sunrise sector given the growth potential seen by the companies. Speaking to BQ Prime's Neeraj Shah, Jai Singh says defence stocks can see a double-digit earnings growth in the coming quarters and shares his top stocks from the sector. Listen in.
Margins do well in those sectors which are driven by capex, which includes cement, building construction, discretionary spend, and more so, power build industries, wherever you're seeing a make in India story come up, like defense, like railways growing in terms of capex. And I think that's the trend where we would be focusing on, where historically you would never have a definition of order book to revenue growth ever thought of. Now the order book to revenue growth in a couple of sectors is as much as 6 to 8 times. If it's as much as 6 to 8 times and you believe cash is king, these sectors is where we would be focusing on. When I say capex, you've got a lot of make in India stories which are replacing capex as well. I mentioned defense out there. Just assume, if we were buying a lot of our products in defense from the rest of the world, and now you've got companies in India which are producing it, and courtesy the Indian government, a lot of orders are going to them. That's where the order books are swelling. They don't have a balance sheet issue. They're net cash, most of them, which means whatever is the top line growth, as soon as the execution occurs, the EBITDA net profit growth could be as much as 15 to 25%, depending on the defense company we're talking about. And it's the same story for most of the capex companies.
Now, after firing 170 employees, health education startup Mojo Care has landed under the investors' scanner. According to sources, investors in the company claim to have found financial irregularities that are expected to dent operations. The company, however, in a statement to BQ Prime, denied all accusations of money being taken out. Rishabh Bhatnagar, who's tracking the story, joins us now.
First Go Mechanic, now Mojo Care. In less than 4 months, 2 startups have been accused of financial irregularities by their investors. This time, it's Bengaluru-based health tech firm Mojo Care that has been put under the scanner by its investors that include Chirate Ventures, B Capital and Peak 15 Partners, which was earlier known as Sequoia Capital India. These investors initiated a review of the company's financial statements and alleged that initial findings have uncovered financial irregularities and said that it has become apparent that the company's business model is not sustainable due to operational and market factors. As a result, these investors said that Mojo Care will be scaling down operations. Mojo Care, however, denied all accusations of money being taken out of the company. All these developments come right after the company fired about 170 employees on Friday. Notably, also the layoffs come within a year of the company having raised over $20 million. The path that Mojo Care seems to be going down is reminiscent to that of Go Mechanic, which also fired employees and was at the receiving end of a forensic audit by investors. It was sold off in a fire sale shortly after. So yes, the crackdown on weak corporate and financial governance in startups continues to increase.
The first sovereign gold bond issue of the new financial year is now open for subscription till the 23rd of June, and the sovereign gold bond has been a tax-efficient way for investors to take exposure to gold. There are several factors that make this particular issue attractive. Alex Matthew joins in with the details.
Well, this is the first of two tranches of the sovereign gold bond scheme that has been launched by the Reserve Bank of India. That issue is open from today all the way up to Friday. The price of the issue has been set at 5,926 rupees per gram, and for those that subscribe to this online, you get a discount of 50 rupees. This is significant because the prices of gold have declined quite sharply from the recent highs in the month of May. Now, you will be able to buy this, of course, from various banks and other sources, of course, including the stock exchanges, the NSE as well as the BSE. If you aren't familiar with the sovereign gold bond scheme, I'll take you through a few very key details. First and most important, you have to hold this for a period of 8 years. You have the option of selling early, but then you lose the benefit with regard to the tax treatment. If you hold for that entire 8-year period, the capital gains that you might earn from this are waived. Of course, you get the closing price of gold after that 8-year period. If you made a loss, you will have to book that loss. If you made a gain though, that capital gain tax will be waived. You also get a 2.5% interest per annum, and that's what makes the scheme very attractive. Now, besides this, there are also changes in the tax rules for gold ETFs as well as gold mutual funds that have made them less attractive, in that all of the gains from these schemes starting from April this year are classified as short-term capital gains, and they are taxed at your slab rate. So particularly if you are in the higher tax slabs, then the sovereign gold bond is a better option if indeed you can lock those funds away for a period of 8 years. The final thing that you need to bear in mind is the probability of gold prices rising going forward. A lot of countries in the world, a lot of economies are seeing interest rates at their peak, and traditionally we've seen that interest rates falling has a positive correlation with a rising price of gold. So that's something that you should bear in mind.
And with that, it's a wrap on all the business news of the day.